Hey guys, good morning. It's Angelo Christian. Today we have another great edition. Every Friday we do Talk with Angelo, where all of my great fans, my followers all over the world, they call in and talk with me to talk about real estate, credit, funding, loans, all different types of situations. So happy to talk with you guys today. Call in. You actually call in, talk with Angelo at 832-431-6331. Love to talk to you about helping you with funding your real estate deal. We have hundreds of callers on the queue lined up right now, so I'm going to actually pull them in. You can actually hear them talk about their situation, what they have going on. Obviously, if it can help to benefit you guys out there, that's the purpose behind Talk with Angelo, so you can actually hear how to solve complex real estate situations and better your life. So let's pull up some people that are on the line, and let's see what we got going on. So let's take a look. So let's pull up the first person in the queue. Let's see who's on the call right now. 1 second, everybody. So yeah, call in, talk with Angelo, 832-431-6331. Any questions that you have for real estate, funding, loans, commercial, residential, hard money, government loans, whatever.
Hello?
Hello?
Yes, hi.
Are you there?
Yes, I can hear you.
Yeah, hey, this is Angelo Christian. How are you?
Good, how are you?
Good. Yeah, thank you so much for reaching out. I got your call earlier, so I wanted to check in with you. Who am I talking to?
Vadim.
Well, cool, man. Thank you so much for reaching out. And what city are you calling from?
At the moment, I'm in Rochester, New York.
In Rochester? Okay, cool. Well, how can we help you, my friend? What's going on?
Well, my wife and I, we want to get into buying foreclosure homes, whether to resell or to own as rental properties.
Gotcha.
Is something that would basically be a decision depending on each individual property alone.
Right.
But we are, or at least I would like to know more information as far as, what are the interest rates? What do you guys offer? How do you guys do your loans and so forth?
Right. So let's take a look. So you want to become an investor, professional investor, and do real estate flip deals?
Yes, my wife is a real estate agent, so that's the reason why. She became a real estate agent and got her license in real estate.
Gotcha.
Because that's the best way to go if you're going to get into real estate investing.
Right. I agree. There's a lot of money to be made, and you can help a lot of people if you do it the right way. So let me ask you a few things here. Have you or your wife ever done a real estate flip deal before?
No. Basically, I'm personally in the construction industry. I do a lot of water damage stuff. I do a lot of masonry stuff, and I come across where I take projects and basically sub them out to my subs. And I renovated my own personal house basically completely, because that's the house that we live in right now.
Okay.
But I purchased it it wasn't a foreclosure, but we purchased it. And I ended up literally doing everything: the flooring, trimming, cabinets. I literally redid everything.
Okay.
But I am in the construction industry, and that's the reason why I'm really want to get into buying properties and being an investor.
Right. Okay. Well, now what about for your wife? Has she ever done a flip?
No,
Okay.
No, she doesn't.
Okay.
She just buys and sells for retail.
Gotcha.
Real estate.
And where do you think that your credit scores are for you and your wife right now?
Good question. I know she's over 700, 100%. Honestly, I don't know where mine is. I probably am assuming over around 650, over 650.
Okay.
I know I've gotten up there in the past year or so, because I've been doing a lot of transactions for business through through credit cards and paying them off right away. So I know it helped out a lot as far as that. But how much, I don't know.
Okay. All right. So basically, how we would look at a deal like this, you'd be considered a first-time flipper, which is fine. We work with first-time flippers. Yeah, and you can purchase a foreclosed property, get the funds to take down the property, get the funds to rehab it. Generally, on your first deal, you will have to put some money down, some skin in the game, because it's your first deal. So typically on your first transaction with us, We want to see that you can prove yourself, you can manage it, and you can actually flip the property. So I would expect that in the first one, you'd have to put like 15 to 20% down of the cost for the purchase of the property. And then you could get up to 100% cash back for the rehab. And your interest rates with your credit would probably be somewhere between 8 to 9% with where your credit's at. It's a 1-year interest-only loan with no prepayment penalty. And you can close within usually a couple of weeks of getting, after going under contract. So after you close and flip your first deal, the benefits kind of open up, and you could get 100% of cost, meaning that you won't have to put a down payment up to a maximum 70% of the ARV. So you could theoretically, if the property had enough equity spread, you could theoretically get all of the rehab and the closing costs included, not have to put any money down. That would be an ideal situation if the property had enough equity for you. So, and you can go up to $1 million on a purchase price with that particular program, 1 to 4 family properties. So, so that would be the step 2. Step 3 would be that after you do a few deals with us, we'll actually offer you a investor line of credit. And that investor line of credit, you can build new construction, you can do fix and flip, you can do mixed use and multifamily up to 20 units on the same credit line. And you can have that revolving credit line there to go take down as many properties as your line will allow, and you don't have to keep getting it approved and pay more closing costs and do more loan applications because you already have your line of credit. So it's a 3-step process for investors, right? So that's how it works.
Okay, so with the first deal, I would need to put down between 15 and 20%.
That's right.
Just to show you guys that we know that we make sums and we know what we're doing pretty much.
Then
to build that trust relationship, and then after that, you guys would open up the door where I won't need any down, and I can do 100% financing.
But again, on that though, that's up to 70% of the after repair value. So you have to have 30% equity on the after repair value to do 0 down.
Meaning the property would need to be after it's repaired 30% over the loan.
Well, basically, yeah. So let's say that you go and so we order a future as-built appraisal, and we're going to find out from the appraiser, okay, how much is this house going to be worth when he fixes it all up? What is it going to be worth? So let's say you have a deal that you buy for $200,000 and you sink $50K for rehab. This is a classic example. So you buy the deal for $200,000 and then you have $50K in rehab. So your total outlay is $250, right? So, but then the future value of the home after you do all the repairs is $400. So you take $250 divided by 400 and you're at 62% ARV. So you have 38% of equity in the property. So that's a very good deal. So, but let's say that in the same example that you buy the property for $250 with the rehab, and the ARV is only worth $300,000. So $250 divided by 300 would put you at 83% ARV. So this would not be a good investment for you. It would be a bad idea to do the deal if you could only sell it for 300 because it's too risky. Okay. So does that make sense?
Yeah, it makes sense. So basically, the fix up, the cost of the foreclosure plus the repairs, there has to be a good amount percentage between the foreclosure amount, fix up, and the retail value.
That's right. Yeah, and it's not just for the lender; it's for you too, to protect you.
Oh, it makes perfect sense.
Yeah. So no, we'd love to help you out with it. What I'll do is I'll get you over all the information on the investor fix and flip program. Is this your cell phone?
Yeah, that's my cell.
Okay, so we'll text you over all the information on it, and I'll have one of our lenders reach out to you. But yeah, we'd definitely love to help you to scale your business and get going with it. We have an investor packet. I can email it over to you. We don't charge any upfront fees or any application fees or anything like that. So, but this is enough to go ahead and get started to help you out. So with that said, I'll get the information out to you today so we can get started on it right away so we can help you to take you to the next step. We'd love to take you on as a client to help you to make this happen.
Okay. Well, another question. 8 to 10%, that's on all your deals, or that's on just on your first one, and then will go down if you do more business with you?
Yeah, so on the hard money, the fix and flip, those are the going rates. If once you get a line of credit and you get more established, you could get into the 6 or 7s. But those are the going rates, yeah, for investor fix and flips. Obviously we have tons of loan programs, and we have interest rates as low as 2%. But for this particular product, yeah, those are the going rates, yeah.
Okay. As far as the appraisals, the appraisal would be the ones that we use, or that you guys will send out your own?
We have to order that, and then you pay out of pocket for that appraisal. We have to order that though. The bank has to order that.
Okay.
Yeah.
Okay. So basically, you guys will send out one of your own guys.
Well, it's a local appraiser. I mean, they don't work for the bank. It's a separate company, a third party, but they're local to you. But they're approved with us on our roster to prevent any type of fraud, right? So they're approved with us already.
Mm-hmm. Okay.
Yeah, because the appraisal is the most important part in this deal, and then obviously your experience.
Okay.
Yeah.
Okay.
So. But yeah, I'm glad you called in today. Thank you so much for reaching out. I'm going to get over all the information to you. This is not the last time that we'll be talking. One of our lenders will also be reaching out to you. So then that way we can get this deal moving in the right direction.
Okay.
Yep.
Okay.
Give me a few minutes. I'll get this over to you. We'll take it from there. Thank you so much for calling in today. Have a happy Thanksgiving. All right.
Oh, one more question.
Okay.
As far as the qualifications, what is needed besides the 15 to 20% down? Because I am self-employed and my wife only works part-time.
But when you're doing loan, that doesn't matter. Like tax returns, bank statements, pay stubs. So this is not like a conventional loan. That's why you're paying higher interest. So they don't get into your financials like that. So as long as you have a 600 or higher credit score and you have the money to put down, that's the risk that the lender takes.
Okay.
So yeah, I mean that comes with the loan program. That's why you're paying a higher interest rate, because they don't dive into all that like a bank does.
Okay.
Does that make sense?
Yeah, it makes sense. And then on the first time loans, as far as the foreclosure, I know typically a lot of the because we tried doing with the regular just local bank. They won't give you a loan until you basically go in the property, turn on all the water, make sure it's like livable condition. Well, the reason why we're getting into this is because you want to buy pretty much a house that needs work, meaning the water, the plumbing might not be good and so forth. That's why there are foreclosures for investors to renovate them and make money on them. Now, how does that work with you guys? Is it something that it has to be done the same thing, or is it different as far as if we present let's say we do find a foreclosure, what happens if we do find foreclosure but it's not in a livable condition, where it literally needs to be gutted and redone?
Well, that's what this loan is for. So we know that it's all messed up. We know that the utilities aren't working. So we don't care about this. So this is not an FHA loan. This is not a VA loan or a conventional loan. So the fact that it needs to be gutted out, or the utilities, it's inherent with the loan program. So we know that going into it. You're going to give us a bid for the rehab. So we're going to see all of that. So we know that, and we're comfortable with that. So that's okay. So now if you're trying to get a conventional loan, like later on, yeah, they check all that stuff. And utilities have to be on, or FHA. We do a ton of FHA loans, and they check all that stuff. But this is way different. So you don't have to worry about that.
Okay, so basically, then once we find the property, present it to you. This is the property they want to buy, and then goes what? You
Yeah.
guys send out an appraiser?
Yeah. I'm going to get you over this checklist, and it'll be very coherent about what the steps are, and you'll see everything step by step. So I'm going to email that out to you, and you're going to be assigned to a lender, and then they're going to go over the whole process with you, like step by step. So that you're always going to have somebody there with you, like to help you through the closing. You're always going to have a processor, a lender that's going to be with you every step of the way to make sure it's done the right way.
Okay, and one more last question. Say we do buy a property and we renovate it, and it's financially better rent to go ahead and rent it out. We can just go refinance it, and that's it.
Say that again.
Say we do buy a foreclosure, and the foreclosure and the fix up or everything, financially or numbers wise, it makes more sense for us to keep the property and rent it out to a tenant. What do? We just refinance it with another bank? Or?
Yeah, you get off the bridge loan to go to a long-term fixed. Yeah, we would refinance you and get you off the bridge to go to a long-term fixed. That's right.
How much are interest rates on the fixed property?
Yeah, those are like low, like 5%, something like that, 5.5% on a 30-year fixed.
Okay, do you need much down to refinance that or no?
No, you don't put any money down on the refinance. You use the equity. You're not going to put any money down.
Okay. Understood.
Yeah. So, okay. Yeah, man. Good talking to you. Good questions, and we'll get that out to you. We'll follow up with you. We'll help you to get your first deal going. Okay. All right, guys, that was a great call. Investor, we love to help investors with property fix and flip. We can actually do commercial and residential fix and flip. So if you're an investor, we do that nationwide from Hawaii to New York. We do multifamily, hotels, condos, 5 units, apartment complexes, single family. So great call. Talk with Angelo, 832-431-6331. Thank you. Next caller, please. Let's see who we got. Let's go. Let me see here. Thank you guys. Talk with Angelo, 832-431-6331. Helping Americans all over the country, investors, business owners, getting real estate funding loans, first-time buyer, millennials, FHA, VA. Remember, our minimum loan amount for residential is $200,000. Commercial, our minimum loan amount is $500,000. Hello?
Hello?
Yeah, hey, good afternoon. This is Angelo Christian. I was calling to get back with you.
Oh, okay. Hey, how you doing, man?
I'm doing good, sir. How are you?
Okay. I think my partner had already, I don't know if he had called or not, but I'm just calling because he was supposed to do it, but he had never called me and told me if he had done it.
I don't know if I've spoken. What's your name, sir?
Lincoln Minor.
Okay, Lincoln. And what city are you calling from, Lincoln?
Lancaster County. The county is Lancaster.
What city is that, though?
That's in Kilmarnock. That's in Virginia.
Oh, Virginia.
Kilmarnock.
Okay, so you're way up there. I'm in Houston.
Oh, yeah. Oh, that's why that number came up saying Texas.
Yeah. So is it snowing up there?
Well, not at this moment, but a week ago it was.
Okay, cool. Well, Lincoln, what's going on? How can I help?
Well, we're trying to get a loan, to help out on the work that we got going on right now.
Okay. What do you have going on so I can better understand?
We're in the flipping business. Buy homes, put them, fix them up, put them on the market.
Yep.
And to tell you the honest truth, we do have a lender that's funding us.
Okay.
And what's going on is we got this little area that they call the red zone. That's if they want us to bring it to the table when we closing and stuff, and we short like $10,000 on this house to make this deal work.
Okay, so you're buying you're doing a flip, and the investor is not able to give you all the money to get the. They stop at 70%. And we had enough to back it up, but we just short like 12,000 really. Okay. But because I can find the rest, that's why I say 10. But if I could give me a cool 15, why not? Well, okay, I got you. So we are an investment bank lender too, and we can potentially go up to 75% ARV. That can probably get you the extra money that you need, but we would have to take the whole mortgage though. We don't do a second loan. we would have to take the whole deal. So we would advance you funds of 75% ARV to be able to purchase that property and close on it. So with an extra 5%, you might be able to get there and get closer. A lot of lenders aren't going to do a second on a loan that small with that type of risk. You'd have to do like a personal loan or a payday loan or something like that for somebody to even do that. But I'd be interested to do a first lien for you at 75% and become your new fix and flip lender.
Well, to tell you the honest the truth, man, there's no such thing as I can't have a different lender or anything. Right. It's not nothing that we put in to say, okay, I can't have multiple. Right. I'm just saying, even though we haven't closed yet on this deal, so it's not like I can't like go through a different, you know what I'm saying?
Mm-hmm. No, well, we'd love to help you out. So what I'll do is I'll send you over all my information. I'll have one of my lenders reach out to you. So then that way we can get the deal going. Are you going to be available today so we can go over all the steps with you?
Yeah, but would it be anything, we got a commitment, we're on the contract and it's closes days on the 6th.
The closing time is fine. It's just that's why I want to have my lender reach out to you today so we can get on it. We just need to transfer the file over to us, and then we can get on it right away. So what I'll do is I'll have one of my lenders reach out to you today so we can get it going right away, and then we'll take it from there, man.
Okay, man. That sounds like a plan.
Yeah, awesome. Thank you so much, and have a happy Thanksgiving. We look forward to helping you.
You too, man. If you can, appreciate it.
Yeah, absolutely. Thank you so much. You take care.
You too.
Right, bye-bye. Hey guys, yeah, that's a wrap for today. Talk with Angelo every Friday. We roll out this show. So please stay tuned. Call in, ask with your questions, 832-431-6331. Nationwide commercial residential lending to help you to accomplish your financial goals. Whether you're an investor, entrepreneur, business owner, you need funding for your real estate, SBA, FHA, VA, conventional, hard money, private loans, call Angelo Christian, the king of real estate, for 17 years doing billions of dollars in business. You can check me out online, Google my name, been all over from Bloomberg, CNN, Good Morning America. My reviews, my name speaks for itself. Give us a call, 832-431-6331. Take care, peace out, guys. Have a happy Thanksgiving. Bye-bye.